India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. The Tuesday morning, early part of the week. Yesterday was a good session after, of course, poor GDP numbers. And does that set us up in a nice way for some more continuation of what we saw and how we closed yesterday? I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Hi, morning, folks. Well, I guess the Bulls managed to climb this big wall of worry on growth yesterday, right? And today morning, the setup is not too bad. And things are looking quite okay. World's a quiet and calm place. So who knows? Maybe more.
Maybe some consolidation in the near term as well. And we're climbing the wall of worry. But I think, at the top, there is a bit of an issue. So let's see whether or not
they
have enough, 150 points.
Oh, God, did I just give away my age? That's a really old one, right?
I think it's been 15 years since the last one.
Oh, my God. Okay, let's move on, guys.
Vinci, what?
Nigel, my God.
The spider goes up and the spider climbs a couple of steps down.
Anyway, I mean...
markets, guys.
Okay, all right. Well, we got markets to track, right? So let's, as always, begin with where US left off. And, it's a good way. The US market started December, last month of the year. Seasonally, it's a better part for equity markets for US and India, everything. So S&P was up a quarter. NASDAQ was up about 0.96%. So that's a pretty good handover. 10-year yield, 2 basis points up, 4.19%. And the dollar index is up about 1/3%, about 106.38. Now, remember, last week, treasuries in the U.S. rallied. Yields came off sharply. I think almost about, 25 basis points or so. And that largely was on the back of Scott Bessent being appointed as the Treasury Secretary over that weekend. So last week was a big one. I think now markets, of course, are reassessing. There's still 40, 50 days to go for Trump to take over in terms of the inauguration. So we'll be here more between now and then, or, as we head into the rest of the year, announcements and proclamations, etc., will slow down a little bit. I think it'll depend on that. Dollar also had a bit of an up move. Now, ISM manufacturing numbers came through. They're still in the contractionary zone, mind you, but they were better than expectations. 48.4, estimate was 47.5. And the new orders component came in above 50 for the first time since March. And this, I think, is good news. By the way, you also had the S&P PMI numbers, the final reading of the November PMI in the US, which was also revised up. So actually, in terms of data, it was not a bad day. You had Fed Governor Waller, who usually leans hawkish. He said, a cut in December from the FOMC is likely if data does not surprise. And by the way, we are going to hear from other members as well. I think Fed Chair Powell speaks on Thursday. And of course, then there's the monthly jobs data, etc. Now, oil prices 1.5% lower, about just under $72 a barrel. Euro USD, will not break parity? I mean, that's essentially the big debate. We broke 1.05 and then kind of came back above it. Key political parties in France, and of course, the crisis point right now in the euro area is France. Key political parties are going to vote for or against. Essentially, it's a no confidence motion against the current government tomorrow. But the expectation is that through the course of the day today, we will see some headlines in terms of which way this really goes, or is there a last-minute compromise or not. So that is Europe for you. Just to circle back and tie in the levels here, the market closed around the 40-day exponential moving average yesterday. The recent high, which we've put out for a few days now, 24,351 is the first resistance to take out, which we've not been able to for the last at least 6 trading sessions now. Support comes in at the low of 23,873 on the downside. Nifty Bank, the picture actually I would say is a little more unclear as compared to the Nifty. But here resistance at 52,680. These are very near-term levels. And support for the Nifty Bank comes in basically at where the recent low has been for the last 3 sessions, which is around 51,760. Although yesterday we did break that level. And then, of course, the Bank Nifty staged a big intraday rebound. The GIFT Nifty will come up on your screen. and it'll give you a sense of how the index is starting, about 4-point change. So nothing on it, at least at 8 this morning. There is, of course, other big news as well locally, which I think I suspect will dominate headlines, and GST.
Yeah,
Survey.
yeah, absolutely. It's a huge exclusive that our colleague Timsy has picked up. More on that in just a bit. But let's quickly check the Asian region as well. Actually, Asia is doing really well. It's taken off from Wall Street. And barring the China markets, mainland China and Hong Kong, don't look at those two indices. Yeah, these are down. But look at the other ones. Taiwan's up 1.5%. Nikkei is getting a roaring rally moving along. Over 1.5% up in Japan. Singapore is higher as well. Korean markets are doing okay. Inflation print has come out in Korea. Inflation continues to inch higher over there as well. And you remember the central bank had already cut rates in Korea. So that's regional news. Markets are doing pretty well. And the overall global setup is quite positive. I think it's just looking out for more clarity with the jobs report on Friday, and then eventually, reading into the Fed's mind and what the FOMC is going to do later this month. 17th and 18th of December is when the Fed is meeting. So right now, cruising along. Now let's get to that big CNBC-TV18 exclusive. Now this is something that before that, yes, I forgot to mention the flows as well. The flows picture is not looking too bad. Now, yesterday's sell number is just 238 crores. But before we start jumping and rejoicing, let's remember that there were a couple of large block trades that happened yesterday as well. Cipla was one of them. There was also Home First. So a lot of the buying and selling in these trades is also skewing the FPI data to an extent. So we need to kind of keep that context in mind and look at it with that prism. But yes, for what it's worth, at least we are not looking at a huge slam dunk on the FPI number, at least yesterday. Now coming to the CNBC TV18 exclusive, and that is GST. It appears that there are a lot of big changes that could be on the anvil. What Timsy has picked up, and we'll have her on the show in just a bit, what she's picking up is the group of ministers could be proposing major changes. Now, what are these changes? Number one, look at a brand new rate above the current highest rate, which is 28%. Look at a new rate called a special rate of 35% and put this on some of the sin goods like maybe tobacco and maybe aerated drinks. The other very interesting aspect that Timsy is talking about, what she's learned from her sources, is that for a lot of consumer items, the GST rates could be dependent on the price of that item. Now, that could be watches, it could be shoes, it could be, ready-made garments as well. So the higher priced items, the thinking seems to be they should be getting the higher rate. If you're buying shoes worth 15,000, for instance, above 15,000 rupees, then you should be paying 28% tax and not the lower tax. So that seems to be the broad thinking. And let's see how a lot of these stocks react, because in some cases, this could mean that the rate starts going up. However, the good news comes in for insurers, and this is something that we've been reporting on for a long time, and it seems that GOM is now going to propose that you offer some relief on both life insurance and general insurance, especially to senior citizens, which is, of course, a long-standing demand from the industry as well. So a lot of stocks, textile, apparel, shoe makers, shoe retailers like Metro, and, of course, the insurance names, watch out for all of them. They could be dominating headlines. Last but not the least, lots of other corporate action, and our team will tell you more about this as well. Precol and Nazara are both in focus. Nazara has announced a bunch of acquisitions. We'll talk to management as well as we go along. Torrent Power is doing a QIP. So lots of individual company-specific action that will dominate. But the bulls will hope, Nigel, that that momentum that they had yesterday, that continues today.
Well, indeed. And in fact, the only problem for me is that the dollar index, that's looking relatively stronger, which could be a bit of a worry. But otherwise, what did the FIs do in yesterday's trading session? Well, on the F&O front, they added more shorts than longs, and they added close to around 3 shorts for every 1 long position. And in terms of positioning, well, it's close to around 67% of their positions on the short side. Even in absolute terms, the FIs, well, they are net short with close to 100 lakh contracts on the short side, while the clients, well, they are at around 1.8 lakh contracts on the long side. The PCR number should come up for you as well, and that is at around 1.22, which is the higher end of the range. It's moving towards the 1.5 odd. As of now, it's in the middle of it. At the lows, it goes to around 0.7. At the highs, it's around 1.5, 1.6 or thereabouts. And the options data suggests that we're in this broad 500-point range. So 2 strikes that were active come up for you on the screen on the call as well as on the put side, which brings us to those levels. On the downside, that 23,900 mark becomes very, very important. On the upside, resistance comes in at around 24,400. This is going by the options data, going by last week's highs as well as last week's lows. So that's why I'm looking at that broad range. Once we get past the 24,400 odd mark, then you're looking at the 50 and the 100 DMA. That comes in that vicinity of around 24,650 odd mark. Well, the Nifty Bank, that's the one that's underperformed for the last couple of trading sessions. And it goes to this level of around 51,600, 51,700. And from there, it's seeing a bit of a bounce. So on the downside, actually, looking at the DMAs as well in the technical levels, that 51,500 mark becomes important. But for the last two sessions, the Nifty Bank has been a relative underperformer. Stocks that I'm looking at. Yesterday, PVR had a good close in yesterday's trading session. So if you looked at the chart, well, it ended virtually at the high point of the day. And it appears there is some excitement ahead of Pushpa 2 release, which is later this week itself. I've spent some time with Allu Arjun, and in fact, that superstar will be bracing for his brand to get built on even more, because rough estimates suggest that on day one, the global collections could be nearly around 300 crores, which will be shattering a lot of records also. So yesterday, technically, the stock did have a good close in trade. There is some excitement ahead of Pushpa 2. Let's see whether or not it is the blockbuster that the street is anticipating. But that one, in fact, in yesterday's trade looked quite good. As I mentioned, ended higher. So keep an eye out on PVR.
Okay.
Nigel, I thought there would be a picture there.
I would have liked it, but I didn't want to push up
But you as
producers
a
to
star
that.
on the poster.
And brand Allu Arjun, I mean, it's going to be something to look, I think.
Okay, so plenty to track the stock and the movie. But let's kick it off then with the equity call of the morning. Sandeep Tandon of Quant Mutual Fund says that they earlier raised the spectre of worsening economic and corporate data, both of which are now bearing out. He says although high-level macroeconomic and corporate earnings data merit tracking, most of it, if not all of this, have been below estimates. Data are factored in, and timing is ripe for being optimistic about selective segments of the market. He says, hence they are now close to fully deployed and believe that risk-off phase is in its fag end stage. That's a bullish view coming in, that the data is backward-looking. Look ahead, it's time to get optimistic. That's Sandeep Tandon.
Okay, well, that's and we'll get you more views as we go along. Marco Papik is Chief Strategist at BCA Research. He's with us now. Marco, good to have you with us here. Thanks very much for your time. U.S. Treasuries rallied about 25 basis points after Scott Bessent's nomination as Treasury Secretary. He's seen as, something that markets can work with, and, it's not sort of all-out war in that sense with him. Yeah, but over the weekend we got that tweet from President Trump on BRICS and tariffs and de-dollarization, etc. Do you think anyone around Mr. Trump is going to really try and will be able to temper what he wants to do? Will have a say, or is at the end of the day? I mean, maybe one theory is the reason why he took so much time debating who to get as Treasury Secretary was because, maybe he wanted Mr. Bessent to agree to agree with him, whatever he wanted, tariffs and otherwise. What's your sense, Marco?
Well, first of all, thanks for having me on the show again. I think when it comes to Scott Bessent, he's a Wall Street veteran. He's a legend in the financial community. And so you can see that the bond market rallied as a consequence of him becoming the Treasury Secretary. Now, investors who are familiar with emerging markets know this is the Ministry of Finance effect. You have an election and then there's a big, question of who's going to be the Minister of Finance. This is usually what investors focus on in countries like Brazil or Mexico, not the United States. So the fact that the bond market rallied on the back of Scott Bessent appointment, is both a testament to his legendary status, but also it is a testament to how on the knife's edge U.S. bond market really is, how stressed it is due to the potential for the Trump administration to add significant fiscal stimulus and therefore significant budget deficit. Now, what I would say is that I don't think that Scott Bessent can really, temper President Trump's policies. He can advise, which is what his role is. But ultimately, it's going to be the bond market that binds the U.S. into a much more orthodox fiscal outlays. So I would expect much less deficit over the next 12 months than many investors expect. And that initial market sell-off, the bond market sell-off, which was actually quite vicious, and it was really very profound. First time in U.S. history, the Fed cuts interest rates 75 basis points, the 10-year yield goes up by 75. That doesn't usually happen in the U.S., and I think that was a warning shot by the bond market not to test it.
Now, that's a really interesting thesis, Marco. So it seems the bond market for now is playing the role of a disciplinarian. That's interesting. So let's talk about the next piece then, because we're going to be moving towards the jobs report on Friday, and then eventually, everyone's wondering what the Fed's going to do in December. When the election verdict came out, there was a bit of a worry about whether the Fed can keep cutting, rates or not, even if it's warranted, or the whole freedom of the Fed debate came up. Are you expecting more rate cuts? And do you think the equity market in the US has reasons to cheer?
Well, I would expect them to cut in December. I think it would be weird, if they didn't cut, because they cut so much before the election. So the charge of politicization would be actually if they didn't cut. In other words, oh, I get it. You cut when President Biden's in charge, but now that it's President Trump, you don't. So I would expect a cut. Now, the question is, of course, why they're cutting. They're still cutting for, sort of precautionary reasons. They're trying to move the U.S. economy from a cash and savings-driven cycle, where households were spending a lot of the excess savings that was built up during the pandemic. They're trying to move it away from a cash-driven cycle to a leverage-driven cycle. And that's where that bond market reaction function really matters. If the long end of the curve doesn't continue to come down, and as you noted in your program, it's now below 420. So if it doesn't continue to come down, then the efforts to lower the front end are going to be empty. They're going to be vacuous. They're going to have no effect on the economy. And so it's very important that both the Fed cuts, but also that the long end responds and comes down around 4, maybe below 4, which would be ideal. It allows households to transition to buying, durable goods, homes, and also it allows corporates to refinance their debts in 2025.
All right. Hi, Marco, and good to see you, Ben. Thanks a lot for joining in. Marco, how are you positioned on global equities? The last time we chatted, you were leaning more towards a Trump winning the elections. That's happened, which has sent the US markets flying. And I think you were leaning more towards Europe and Japan in comparison to US. But US now is doing quite well. So globally, how are you positioned on the developed markets, as well as where does India come in? As you mentioned last time, that India was priced perfectly and we have underperformed of late.
Yeah, so I would say that over the next couple of months, it's going to be very difficult to try to catch a falling knife of global equities. The US is ripping higher on the expectation that President Trump will be able to deliver some of his fiscal programs. What I would say is that it's, you were mentioning earlier about the DXY, the dollar-euro exchange heading towards parity, perhaps breaking through 105. I think these are very important things to watch. And it's no time to try to buy into global equities right now at this moment. But at some point in 2025, I think probably mid-year, Q2, maybe not the first 3 months, but certainly starting with the Q2, I think you're going to see the dollar peak. And you're going to see the dollar peak because Trump is effectively going to disappoint in terms of how much growth he can bring through fiscal stimulus. And so bond yields are going to act as a governor, like a governor on an engine that's going to temper the most deficit-busting plans, allowing the dollar to actually depreciate mid-year onwards. And so the time to buy global equities is coming. It's not yet, but 2 to 3 to 6 months, there will be a pretty interesting opportunity.
And in the interim, Marco, just 10 seconds on this answer. In the interim, what's the trade? December, just 10 seconds.
US, just Magnificent
US.
$7, just stay with the momentum. It's
Stay
obvious,
with the US.
It's the Santa rally. Santa and Trump rally.
The Santa and Trump rally, got that.
And maybe Musk as well, right? I think he's the other one who's promised to cut $2 trillion from US federal spending. And I think as someone said it, if anyone can do it, he can do it. Although, lots of debate around that as well. We'll sort of touch upon that in our next chat. Marco, great speaking with you here. And thank you very much for joining us. By the way, as we speak, there is a tweet, I'm not sure this is on Twitter or this is on Truth Social. Trump has tweeted again. He said, I'm totally against the once great and powerful US Steel being bought by a foreign company. In this case, Nippon Steel of Japan. As president, I will block this deal from happening. Buyer beware. So I think this is Truth Social, not Twitter. Usually it comes there and then it kind of sort of is posted on X. We'll more on this later, but let me quickly also run you through what corporate interactions are lined up through the course of the day. 8:35, you'll hear from the management of Nazara. So a slew of acquisitions coming in there. 9 a.m. we'll have Naveen Sahadev to talk about the trends in the cement sector. That was the sector of the day yesterday. Gautam Shah of Goldilocks is a market mouse of the day. We'll talk about technicals. Parag Rao of HDFC Bank will be with us to talk about what's happening in payments, credit cards. Rakesh Sharma of Bajaj Auto will be speaking with us on monthly sales data. 9:50, Rajat Katuri of Signature Global about outlook for real estate in H2. And Lata will be in conversation with the Vetri Subramaniam of UTI AMC, and they talk markets, FI, selling and more. Stay with us.
Well, time to slip into a short break, but we have a lot of stock-specific action lined up on the other side. We'll get into that in just a bit in our special Top 10 segment, but I'm running you through the list. Torrent Power, Precall, Nazara, Protein E-Govern, Solar Industries, Moil, Safari Industries, Indico Remedies, and Godrej Properties. 9 of them will be reacting to good news, while you have Indegene that will be reacting to negative news flow. Slip into that break, come back, we'll get into further detail on all of these names.
Welcome back. So the setup is pretty positive and most of the Asian markets are holding up nicely in green territory. Implied open, little quiet. The only markets that are actually down are the Chinese markets this morning in Asia. Let's boil this down to stocks, which are the ones that you should keep on your radar. Our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Let's first start with the Torrent Power. Abhishek, you're picking up more details on a QIP, some fundraising happening here?
Well, sources do tell us that, Torrent Power will be raising about 3,500 crore via QIP, though they have a board approval of raising up to 5,000 crore. So the indicative price is at 1,503 per share, which is at a discount of 5.3% to closing price and about 3.4% to SEBI floor price. So the discount is on the lower side in this issue. The equity dilution would be around 4.6% post the fundraise that is there. Use of proceeds that they have mentioned in the term sheet is that they will use some of the money to repay certain borrowings and also lower the debt in some of their subsidiaries and general corporate purpose as well. There is a lock-in period of 90 days for promoters post this QIP, and book running lead managers include JM Financial, Kotak Mahindra Bank as well as Jefferies. Back to you.
Okay, all right, Abhishek, thanks a lot for that. Well, let's hop across to Vivek, who's here to tell us about Indegene. Vivek, morning.
Well, good morning. So Indegene will be in focus, quite a large block deal as far as the company is concerned. So private equity investor Carlyle, which holds stake in the company under the name of CA Dawn Investments. CA Dawn Investments is looking to sell up to 2.9% of the total equity. This will be done via the block deal. Now, as per the term sheet, the floor price for this particular block is at 615 rupees a share, indicating that the total size of the block will be in excess of 420 crore. Remember, CA Dawn or Carlyle held over 14.5% stake at the end of Q2, going with the red, given the fact that there's a bit of an overhang as far as PE selling is concerned.
All right, Vivek, thank you very much for that. Precall is the next one we want to focus on. There is an acquisition here. Sudarshan is going to tell us more. So good morning.
Morning, Prashant. So Precall has announced an important acquisition. Company will be acquiring Sundaram Auto Components injection molding business. Injection molding business is a basically manufacturing process that allows for parts to be produced in large volumes. Now, talking about the deals, as per the company, acquisition will be value accretive, and it's an all-cash deal for rupees 215 crore. And company expects the deal to be completed by January 2015. And company has been, for the long time, has been looking to expand this segment of the business. Now, Sundaram Auto Components, this division is part of TVS Motor Group, and talking about the revenue, in the last 2 years, this segment's revenue has grown by more than 23%, and currently revenue stands at 727 crores. So basically, this acquisition will add the top line of almost 730 crore to Precall's balance sheet.
Oh, okay, all right, got that. Sudarshan, thank you for that. So we'll keep Precall on our radar. Rima is joining in. Rima, good morning. So Nazara is doing some acquisitions. You're watching for this one?
More acquisitions. Nazara has been on an acquisition and funding spree since the beginning of the year. So the latest news is the company has announced 5 investments totaling 196 crore rupees. 2 out of the 5 investments are in fresh new areas. So one of them is the acquisition of a 60% stake in a children's play area, Funky Monkey, very popular if you have kids. They have 11 centers, so they will be acquiring 60% stake for an amount of 43.7 crore rupees. The second one is a very small minority investment of about 4.2 crores for a 4.7% stake in LearnTube.ai, which is an AI powered platform which will revolutionize gaming with interactive and gamified learning. And the third and the balance three are basically increasing their stakes in their existing subsidiaries like Nordwind, Sportskeeda, DataWorks, etc. And the company will be spending 148 crore rupees for that. The second stock which I'm watching today outside of Nazara is Protean eGov, because this company has won a 161 crore order from a government entity called CERSAI, Central Registry of Securitization, Asset Reconstruction and Security Interest. Back to you.
Okay, all right, Rima, thanks a lot for that. In fact, the management of Nazara will be joining in to talk about their new investments in a few minutes from now. Well, let's go to Vinny. She's here with some more stocks in the news. Morning, Vinny.
Good morning. Yes, a whole host of stocks that are going to be in focus, and we have Solar Industries. That's the first one we're keeping an eye on. Wholly owned subsidiary has received an export order of around 2,039 crore rupees, and this is for supply of defense products, and this is expected to be delivered over a period of 4 years. So we're expecting green here. Moving on, we have MOIL. That's also in focus. We're expecting green because the production numbers have come in quite well for the month of November. 1.63 lakh tons. So this is the best production that they've seen for manganese ore since the inception that they've seen. And other than that, the sales for November also are at 1.33 lakh crores, which lakh tons, I beg your pardon, which is higher than by 32% on a year-on-year basis. Safari Industries, that's also one to keep an eye out on. The wholly owned subsidiary of the company has successfully commenced production in Jaipur, Rajasthan. This is a greenfield manufacturing facility, and this production has started just yesterday, 2nd of December, so keep an eye on that. Indoco Remedies expecting a green here as well. The company has entered into a strategic distribution partnership with Clarity Pharma. There will be this is in the distribution in the UK. 20 products is what they're looking to distribute over the next 18 months. So keep an eye out on Indoco Remedies. And lastly, Godrej Properties also in focus. They've seen a good traction that has come in for the QIP. 6,000 crores that they've raised via QIP. Received the strongest demand 4 times. That's the size of the QIP. And the net debt to equity ratio has improved below 0.2 to 1 is the ratio is what it is improved to. And the funds will be utilized for growth capital as well. So yes, green expected for Godrej Properties as well.
Okay, all right. Plenty of stocks on our radar. Let's quickly recap our list, the top 10 list this morning. Thanks for that, Vinny. So the ones that have positive news flow are Torrent Power, Precol, Nazara, Protean e-Governance, Solar Industries, MOIL, Safari, Indoco Remedies and Godrej Properties. The only stock with some negative news flow around it is Indegene. That's because of the likely expectation of a block and maybe some private equity investors selling. However, this is just the top 10 list. Now hang in there, because you have to watch out for a whole bunch of stocks on the consumer side as well, from tobacco companies to watchmakers to shoe retailers to apparel retailers, so on and so forth. And Tim C will tell us why, because she's the one who's got the big CNBC-TV18 exclusive. Sources are telling us that the group of ministers set up by the GST Council has proposed several rate changes on actually as much as 148 items, and also the concept of maybe a new special rate, which could be 35%. Tim C, we're all ears. Fill us in.
Well, yes, as you rightly said, the group of ministers on rate rationalization, they met yesterday in Delhi, and that's what they've decided, that when they meet the council in December 21st in Jaisalmer, they're going to present their report on rate rationalization, which proposes to have a special rate of 35% over and above. This rate will be over and above, remember, of the existing 4 slab structure of 5%, 12%, 18%, and 28%. So introducing a new slab there, a new rate, only for 2 items, tobacco and tobacco products and aerated drinks. Now, they say that the rationale behind this special rate will be to make up for the revenue loss, the potential revenue loss that the council will face because of rate rationalization on several other items. They plan to reduce rates on consumer items, daily use items, to bring it down to 5% on several categories. But when it comes to luxury items, for example, ready-made goods, they say that any ready-made garment which is below the price range of 1,500 rupees should be taxed at 5%. Those ranging between 1,500 to 10,000 rupees should be at 18%, and those above 10,000 rupees per garment should be charged at 28%, thus bringing in a concept of luxury. Similarly, they say for watches, luxury watches should be at 28%, The ones which are in the affordable category should be at 5 or 12%, and those in the mid segment should be at 18%. Similarly, for handbags, cosmetics, footwear, all of this, they've said that there should be a concept of luxury, which should be taxed at 28%, and the ones which are in the affordable category should be at a lower rate of 5 or 12%. When it comes to other items, they say that daily use consumer items should be brought down to 5%. But another potential revenue loss category is insurance, life insurance and health insurance premia. There's a separate panel which has proposed that pure term life insurance premia should be exempt from GST, where it is currently at 18%. Similarly, for health, the senior citizens should be exempt from health insurance premium GST of 18%. And non-senior citizens category, there is a two segment that they've carved. One, below 5 lakh rupees per annum of cover, that should be exempt from GST. And those above 5 lakh rupees per annum cover should be charged at 5% instead of current 18%. So there's a huge change that they are proposing of about 148 items, which is likely to be discussed in the upcoming council meeting. Remember, GOM recommendations are not final.
Right.
It is the council which prepares and decides after detailed deliberation whether GOM recommendations need to be accepted or not.
All right, Timsy, it's a whole big set of recommendations, as you said, and we'll continue to get reactions. But it's a big one that we're going to track through the course of the day. Thank you again. Well, Manisha is here with a quick roundup of all the action from commodities. Manisha, morning.
Morning. Well, I'm looking at metals today because, one, we already are dealing with U.S. pledging tariffs on BRICS and China and Canada and Mexico, and that has been weighing onto the market. But on the other side, the street also has reacted to strong China PMI data that has come in. So that is what has brought the metal prices from the lower side. So if you look at the copper prices, we are off 2-week lows. Zinc is holding at around a month highs at 3,100. The street will watch out for 2 key political meetings from China in December and the expectations that there could be more stimulus. Also, in the last week or 10 days, we have seen inventories continue to decline. The markets also are looking at better data coming in from Europe as well. So whether it's about copper, zinc, aluminum, even iron ore and steel prices in the day-to-day seem to be trading on the positive side.
All right, Manisha, thank you very much for that. And we'll have Manisha join us later with more updates. We'll take a quick commercial break here. Amnish Agarwal of Prabhudas Leader is going to be with us with some fundamental stock talk. Nazara Technologies has promised their management joins us as well on their on the new investments they're making. Stay with us.
Welcome back. Lots and lots of stocks to track, and we have an expert in the house to now help us with some fundamental ideas. Amnish Agarwal, Head of Research at Prabhudas Leeladhar, is with us. Amnish, great to have you on. I don't know if you caught that big exclusive that our colleague Timsy was just telling us about, these proposed rate changes, which the GOM is likely to take to the GST Council. And, they're pretty important in terms of the architecture, because what seems to be the thinking now is that tax different goods depending on the MRP, on the price. So if a shoe is priced for 1,000 rupees, it should be taxed differently. But if it's priced at 15,000, it should be taxed differently. So on and so forth for watches, for apparel, etc. And there's talk of more taxes on things like tobacco as well. So your thoughts on apparel companies, apparel stocks, or even something like ITC?
Okay, hi. So I think the tax rates, which are actually, you can say, which are doing the round and which are being talked about. So there are two things. When it comes to some of the goods which are placed at, say, taxation of 28% plus, say, some certain amount of cess. So if the cess is now subsumed in that, then the tax increase is not likely to be that high. So this will be particularly true of, say, whether it is cigarettes or aerated drinks, etc. But in some of the segments, for example, whether it is apparel, whether it is shoes or some of the other products, which might be now considered as, you can say, luxury goods, whereby the taxes might show, you can say, a bigger increase than some of the companies, I think, which are catering to, you can say, very premium apparel. I think your premium shoes, I think those are the products where there will be an effective increase in taxes. And you can say, but I believe that some of those segments, they are not that, you can say, price sensitive. And the consumers who are buying, say, a very expensive watch or you can say premium apparel, there I think it will not move the needle much for any of the listed players.
Okay, so you're not too bothered with some of the consumer goods categories, but what about ITC specifically? What's the house call now? And if there is some, let's say, sentimental reaction, if there's any selling on ITC, would you buy the dip? Would you stay away? If indeed this comes through, 35% special tax on tobacco products.
You see, as I said, it depends in what form it comes. If it is a 35% and cess is over and above that, then it is definitely a negative. But if it is 35%, which includes 28% of GST plus 5% of cess, then the increase is only 2%, which can be easily absorbed by companies. But having said that, we are already in the month of December, and now on February 1st, we will be having the budget. And there is always a chance of, you can say, your excise duty being tinkered in budget, and it happens, you can say, it's an yearly phenomena. So I think ahead of that, I think we usually remain slightly cautious on ITC because the stock actually gives lot of fluctuations as far as your stock price is concerned ahead of budget. So at this point of time, it's time to be slightly on the cautious side in ITC ahead of budget, and if anything major happens on the cigarette side.
All right, Amnish, I think you also track PVR. Yesterday the stock had a strong close. Pushpa 2 is going to be releasing in the next few days, and everyone is quite excited about it. So it seems. What's your view? The talk is that on the first day, the collections could be as much as 300 crores, which will be the highest ever. Your view on the stock?
Okay, you see, PVR has become more like a trading stock because every time you got some good movie releases and to which the box office collections are high, the stock does well. Now, if you look at the pipeline for, say, the next 2-3 months, I think the pipeline looks quite decent at this point of time, which can provide, you can say, reasonable gains as far as your PVR stock is concerned. So as of now, I think the PVR is a typical stock. If the pipeline is good, if the movie releases, you get, say, 2-3 big hit movies during the quarter, then you can actually expect, say, 10-15% return in this stock.
All right, Amnish, we'll leave it there. Thank you very much for joining us. Good speaking with you, and it's a pleasure. Nazara is the next company which is on our radar. The company's been on an acquisition spree. They've made investments worth 196 crores, and we're going to talk about these investments now. Nitesh Mitterson is Joint MD and CEO at Nazara. Nitesh, good to have you with us here. Good morning. So I want to start by asking you, this is acquisition number what this year? First, I mean, it's a string of acquisitions, right? And Funky Monkey, I mean, I think it's a brand that at least all of us here in the studios know very well. I mean, I think the last I was there was maybe 10 years ago, but I've spent a lot of money, a lot of time there. But just tell us a little bit about this. Go on.
Sure. So in terms of acquisitions, as you know, Nazara has a established playbook on M&A where we acquire businesses and then scale them profitably. And I think with the capitalization that we did of the company, we had already told you that we will be doing this series of M&A to set the stage for growth in the coming years, and we are just very busy executing that. In terms of Funky Monkey per se, I think we've got a thesis that offline entertainment gaming is going to become equally big, and there are also hybrid opportunities where many of our digital IPs can be integrated into the offline as aspects of the business. So I think we're creating a full vertical in offline. As you know, we recently intimated we were the successful bidders for Smash. And Funky, while we've not yet taken control of that business, still in the process of NCLT, we've also, acquired Funky Monkey because our approach for the offline gaming and entertainment is going to be a multi-format, multi-IP approach, like we normally do for our other businesses as well.
Okay, hi Nitesh, good morning and good to see you. Ben, I want to talk a little bit more on Funky Monkey because, you know, obviously my kids are a little bit younger. It's not 10 years ago, but 10 months ago, 10 days ago, I could have been there as well. But what is the pending cash in books after making these investments?
We have, I think about between 300 to 400 crores of cash that
Still
would be
there.
enough. Yes.
Got it.
And all these businesses that we are acquiring, right, are all cash generating profitable businesses, which are self-reliant, and therefore they won't put any pressure on our existing cash. They'll contribute.
Got it. All right, Nitesh. So, we got that out of the way. What about Funky Monkey? You know, a couple of years ago, I had my kids' birthday party there. I didn't know they were doing only 7 crores of turnover, and I contributed, I'm telling you, to that. Yeah. That's moved to around 20 crores. Now, you'll have done the acquisition of ballpark. The 100% of it, if you did it, would be at around 72 crores. From 20 crores of revenue potential with margins of around 20%, you clearly see that this business can scale up. So what is the scaling plan of this business with the profitability? And also, is there a provision for you to go ahead and acquire the remaining 40%?
Sure. No, valid question. So in terms of this valuation, right, the 72 crores valuation that you spoke about, that's a post-money valuation that includes 15 crores of primary infusion that we have done. And therefore, if you look at pre-money, it would be a little lower at around 55, 57 crores.
Okay.
In terms of their business, they're currently operating 11 centers. Their current MRR is a little higher than the revenues and EBITDA reported up to last year. So I think overall we bought a good valuation this transaction. I think for growing consumer demand, consumers want to go out, want socialization, and I think formats like Funky Monkey or other formats that we're looking at can be really conducive for that. I think 11 centers in a country like India is way too less. Can we have 50 centers? Can we have 100 centers? Can we have multiple engagement points there beyond what they are currently doing? Can we deploy some of our engagement and retention methods that we use for our digital gaming into these offline worlds? How can we bring synergy with what we do online? Let's say Kidopia, which is a very popular IP with kids, into the offline world. So I think there are a lot of ideas that we have. And we will spend the next, few months working with the founders and management team to build. The good news is that the founders have really, run this business very efficiently over the years.
Sure.
They've gone through COVID, etc., while running it efficiently. So we think they're a strong team back to scale this business to the next level.
Got that, Nitesh. So definitely you're looking to build on the sort of the brick and mortar, the real world experiences as well, apart from the online ones. Now, you've also spent about a little over 4 crores for a small stake, 4.7% stake in an AI-powered education platform. And I think a little bit of money, not a little actually, fair amount of money, 148 crores has gone into existing subsidiaries. Just help us, and we only have, it's a short chat because it's pre-market, but just help us understand how does all this tie into the revenue profile? Because what's happened in the last couple of quarters is that revenue growth has been patchy to sluggish, right? First quarter, it was down 1.7%. Second quarter picked up to 7%. So all these small, smattering of little acquisitions, how does it all tie in? And, what is the revenue expectation now for the full year and more importantly, next year?
Yeah, so I think it's important to understand we are setting the stage for, growth for the next 3 years and not chasing short-term revenue. Quality of revenue is very important for us. And therefore doing the right thing. I think the right growth and right revenue and the right EBITDA and cash flows, more importantly, will be generated. So we're very confident of, the coming quarters as well as the coming years. AI is, I think, imperative for all companies to look at. I think for a digital gaming company like us, AI can be a very big opportunity and can also be and we can also have disruption if we are kind of sleeping on it. This particular company, the founders have done some really interesting work. I think there are a lot of synergies with what
on
we
the revenue piece. Nitesh, if you could just tell us about the revenue piece. Can you do 10% growth this year?
We should be able to. But I think we're not in the business of 10% growth. We are setting a platform for much, much larger growth.
All right, and got that. Nitesh, we'll leave it there and then we'll have you back for a longer chat and we'll look ahead into 2025 as well and what Nazara wants to do. And we'll do that. Thank you very much for joining us on the latest in terms of investments that you're making. We'll take a quick commercial break here. 10 minutes to go, 12 minutes to go for the pre-open session. Mitesh and Sudarshan come up next.
Welcome back. Well, I hope you're having a good morning. For starters, the gift would be suggesting that we're going to be opening up more or less flattish. Mitesh as well as Sudarshan join us on the show. Good morning, gentlemen, and thanks a lot for joining in. Sudarshan, you go first. Tell us what's the trade on the index.
Yeah, good morning. See, last Thursday and yesterday, my suggestion was that we should be long in the Nifty. Now, what is happening is that we are now entering a sweet spot. This is a seasonally bullish month for a period of 2 months. We are just right at the point when we are recovering from a correction. So it's not so expensive. So now there are 2 points. First is that the Nifty and the Bank Nifty are both in a narrow break range. Breakout from that range should give us a significant and reasonable up move. I'm assuming the breakout will be on the upside. We do not know when that breakout will occur. It will occur today, tomorrow, or next week. No one can say this. Therefore, my first suggestion is stay long in at least for part of your position. You cannot know when that breakout will occur. You must be there in place whenever it occurs. That's first point. Stay long for at least part of it. For today, I think the markets will be choppy. So intraday trading should only be done again as a buy on dip strategy, and I don't know how much that will get. But for part of your positions, as I've said again, stay long.
Okay, got it. Stay long is the call coming in from Sudarshan. Mitesh, what about you? Are you feeling as bullish this morning?
Good morning, Nigel. So, we maintained a positive stance yet in the last couple of days, avoided trading the index, but we've been trading on the long side via the stock specific route. I think Nifty, once it clears 24,350, that will give more confidence to go long on the index. We could then look at 24,500 as the minimum target, but 24,650, 700 is the logical range. Similarly, on the Bank Nifty, if you see 52,500 to 650 zone has been a level which the Bank Nifty on the last 4 or 5 occasions has failed to clear. While in the broader market, there are stocks which are making new highs, fresh highs. So I think maybe the index, it will not be negative. I am, looking at the fact that even if the index doesn't give you a big reversal on the upside, there will be some positive drift to it with, mild dose of volatility. But the stocks specific trading could be more profitable in the next few days.
Okay, so let's talk stock specific then. Mitesh, Darshan, good morning to both of you. Mitesh, your calls for the day, stocks?
Yeah. So on the stock side, I have all buy calls today. Dalmia Bharat is a buy at the stop at 1850 for targets of 1950, and the cement pack as a whole looks good. That apart, Emphasis is a buy at the stop at 3015 for targets of 3150. Disclaimer that I have positions over here in the future segment, so there's vested interest. And then a buy on Geo Financial with a stop at 323.5 for targets of 340, and Birla Soft is a buy as well. Keep a stop below 518.9. Look for targets of 620.
Okay, and Sudarshan, what about you? Stock lists for the day?
Well, it's also a buy list. M&M Finance. All these 4 stocks are recovering from corrections. If the Nifty gives us that stance of an up move, all of them should also participate. M&M Finance is a buy with a stop at 270. Overall reality, which is not recovering from a correction, it's a little different. It's a buying opportunity with a stop under 1990. Pidilite, again, recovery from a deep correction, buy with a stop under 3060, and Sun Pharma, similar pattern, recovering from a correction, buy with a stop under 1790. So M&M Finance, Overall Reality, Pidilite, and Sun Pharma, all for buying.
Okay, all right, gentlemen, we'll leave it there for now. Thank you very much for joining us and running us through those specific trading ideas and strategies. We'll take a break. We are back. Naveen Saideo of ICICI Securities joins in to talk about the trends in cement space. Stocks did well yesterday. That's coming up. Stay tuned.
Welcome back. So just about 18 minutes to go before we hit market opening. We have, of course, a lot of special exclusives lined up for you on the show as well. So before we get to that pre-open time, let's bring you the latest from the banking universe. Axis Bank's Deputy MD Rajiv Anand says a growth slowdown was quite palpable following the second quarter earnings. Speaking to CNBC-TV18's Ritu Singh, he says credit demand from corporate India is not much. On the upcoming RBI policy, he adds that while a repo rate cut is unlikely, a CRR cut would be a welcome move.
The 5.4 obviously was a bit of a shocker. But I think if you looked at the numbers in Q2 across the entire spectrum of corporate India, I think the growth slowdown was quite palpable. The question really is this cyclical, and how much of this we will be able to make up in the second half of the year? I think from a bank perspective, corporate India is deleveraged. Their own cash flows are continue to be quite strong, and so therefore to that extent we don't see that much of demand from corporate India at this point in time. Our SME and mid corporate book continues to grow quite strongly. Our mortgage book continues to grow reasonably strongly, but I think the fact that we've seen some delinquencies on the unsecured side has been well articulated, and so therefore all banks, including us, we pulled back on growth on the unsecured side.
So if you talk about credit growth, where is it coming from? What are your focus areas? Any larger figures, since now we're closer to the end of the financial year, what kind of range could Axis Bank get to?
What we have been guiding the market is that we will grow 200 to 300 basis points higher than the market, through the cycle.
Speaking of liquidity, there's been some expectations from some parts of the market that perhaps in this upcoming monetary policy we may see a CRR cut. What's your own expectation? And if there is a cut, what would that mean for the bank? How much excess capital could be released for lending?
I think the fact that we've seen this print on GDP growth has certainly surprised everyone, and I'm sure RBI is redoing their numbers as well. I think your channel has already articulated the fact that with 6.2% on inflation, it's unlikely that we will get a repo rate cut anytime soon. I think it's a very close call on whether a CRR cut is something that we will get on Friday. On the one side, yes, I'd be delighted if the CRR cut comes through, because one of the things that I've been mentioning on your channel as well is the fact that despite the fact that the repo rate is at 6.5%, banks on the margin are raising money at anything between 7.5% to 8% for one-year deposits, and I think that gap needs to come down, and I think a CRR cut will certainly help bringing that down. But I think, to my mind, I think it's a close call.
Well, so you're not expecting any repo rate cut, and that, I suppose, is good news as far as the short-term outlook for your margins is concerned?
I think, given the fact that much of the book is EBLR linked, a repo rate cut will have a short-term impact as far as margins are concerned. Remember that banks are a marginal cost business. If the repo rate comes down, it is inevitable that deposit rates will come down as well, perhaps with a lag. And I think as we think of NIMs through the cycle, you'll find that in India, NIMs have been in a fairly tight range. While we do spend a lot of time and energy trying to manage and have conversations around this, NIMs will continue to stay in a fairly tight range for banks.
All right, well, that's an interesting conversation with the top management at Axis Bank. But let's stay with banking, and here's another big exclusive. HDFC Bank is looking to make securitization a new avenue to raise resources. The bank sees many of its parameters, like loan growth and loan deposit ratios, returning to pre-merger levels by 2027. The bank is garnering increased synergies from the merger, with 95% of new home loan customers opening an HDFC Bank account. My colleague Lata caught up with the CEO, Sashi Jagdishan, and CFO Srini Vaidyanathan, and she's with us with the key takeaways. Lata, good morning.
Good morning. Not often do the biggies of HDFC Bank speak. So it was a long chat, not intended to change the margin and those kinds of guidance, which is already in the public domain, but more in terms of strategy. Now, one of the big things that has shaken the market is this big securitization, some 13,000 crore of auto loans that HDFC Bank has put on sale. And the idea seems to be, according to Shashi, that it's a new way of garnering resources. There are a lot of foreign funds out there which are wanting to buy good Indian credit because, you get higher yields over here. And so this year it may be just 15,000 crore, but in course of time, this can be a 1 trillion rupee generator of resources. But more importantly, it is this loan deposit ratio, which Reserve Bank has been telling all the banks to, grow their deposits first before they grow their credit. So the credit deposit ratio of HDFC Bank had gotten very skewed because of the merger. The point that Srini Vaidyanathan was making is that their pre-merger comfort zone was 85 to 90% was the loan deposit ratio. That is 100 rupees deposits, you should have 85 to 90 credit. Now they are a little over 100. So they expect to come down by 2027 to the pre-merger comfort zone. Originally, they had said 4 or 5 years. So this is a remarkable difference that by 2027, they will come to the old loan deposit ratio. It's also, he reiterated, Srini, what he had said in the conference call. Their loan growth this year will be lower than industry. Next year, in line with industry. And FY27, that is, it will be higher than industry, which it always used to be in the pre-merger days. Then the other big talking point, of course, was bank assurance, Yash story, and the fact that, banca should not be the big source of new policies for the insurance company. He said in HDFC itself, Shashi Jagdishan said, we have always encouraged open architecture. When we sell products to our banking customers, we sell whichever is good. Any insurance company, any mutual fund has been our way of doing things. Also, we have got very thorough recordings when our bankers sell insurance products so that we are very sure that the customer is not coerced. That said, he felt that although the regulator, none of the regulators have spoken to them, if this comes, restricting bank assurance, then the spread of insurance or insurance penetration itself can get affected in the country. So anyway, that was just a point of view. They've not heard from any of the regulators. The other big talking point, obviously, was HDB and the fact that they have filed draft prospectus, and RBI has put a rule out there that they don't want any overlap between the banking, what the bank does, and what the NBFC does. And he said that at the moment, HDB lends to people whom we don't lend at all because they lend at very high rates, so probably riskier loans. But they are aware, of course, that Reserve Bank wants there a distinction over there. If the bank, they are anyway going to pare down their stake in HDB. If the regulator feels that there should be more disjunct between the two, then they will pare their stake faster. But they are still waiting to hear from RBI. In any case, it's a financial investment, so there isn't any commonality between them otherwise, is what they said. On unsecured loans, HDFC Bank kind of made us sit up after the Q2 numbers. They were the only people who grew their unsecured loan. Everybody else was bringing it down. HDFC Bank said that they could smell the problem in unsecured loans ahead of the crowd, ahead of the pack, which they've always done. And so they went slow on it before the trouble began. And now that no one wants it, banks are running away from it, they're getting very good credits at, high yields, mouth-watering opportunities. And so now they feel that they can get on to this. As you know, if anything, their slippages slipped. Their slippages fell. And finally, the synergies with HDFC, where has it come to? He said that all new loans, 95% of the new home loans that HDFC Bank is giving, they're getting a savings bank account. And of the old ones, they had some 3 million home loans, the old HDFC. Of that, less than 1 million had accounts with them. Now 1.7 million have. And that's the, new way of garnering. And the big other synergy is they have sold credit cards and consumer durable loans to these guys because they're sitting ducks. You already done their KYC. Just one click and they get a credit card because, all the KYC is there. And there was just a little bit more of discussion on urban demand is not good in retail. You know, it's very good in SUVs, not so good in small cars. Very good in luxury homes, not so good in, mass housing. So that problem with urban consumption is there. That was the other thing.
Lata, thank you very much for that. That's a very exhaustive kind of, business segment by segment kind of takeaway with that chat with the top management at HDFC Bank. We'll continue to sort of, focus on, drill down on specific points through the course of the day. But I think we got the market open, the pre-open, which has come to an end. And we have cement in focus. Navneen Saidio, Nigel, is with us.
Well, that's right. Yesterday, Jeffrey sounded a little bit positive on the sector, as well as Naveen Saidev, the analyst at ICICI Securities, joins us. And he went ahead and upgraded the sector as well. Hi, Naveen. Good morning and good to see you in after a while. Well, you're expecting cement as well as demand as well as pricing to improve in the second half of the year. But have you seen signs of that so far? In quarter 3, if you could give us a couple of numbers, what has been the improvement in pricing and what about demand?
Yeah, so I think October, November as a month is what you have to look at it in a combined way. So there, I think maybe the numbers may not be that encouraging as such, but December seems to be really promising. And I would really like to believe that December onwards, you will see a good demand momentum coming back. Mind you, year to date, the industry has been more flattish, but I'm very optimistic that from December, you will see volumes picking up. And we are seeing that on ground in the sense, pricing as a result of that has seen a fair amount of recovery. I think North and East as a region is where there are initial signs of a very handsome 30 to 40 rupees a bag increase. And that's what is encouraging or convincing me to turn positive on the sector.
All right, this 30 to 40 rupees in North and East, has it been accepted though? Because in the past, in the last few months, we've seen price increases getting pushed through and less than half gets absorbed finally. But this time around, you believe it's going to stick?
Very, very hopeful on that. First of all, it has happened after a gap of over a year, and our channel checks are far more convincing than what they were in the past, and that is what gives us conviction. The usual signs are also there. Typically, it's the non-trade category which is a spoil sport in terms of price hikes. But there we understand that even in that category, there is a much higher increase that is already announced or underway. And new orders are also being accepted at only the increased rate. So that is another indication or a fact which builds conviction.
Got it. All right. You're sounding very, very optimistic, Naveen. Let's get a couple of stocks then. Ambuja, that's a stock that saw a sharp decline because the promoter entity got itself into a bit of trouble. At least that's what the reports indicated. But that stock has bounced back well from the recent lows. That's your top big bet. Can you give us rationale for that? And why Ambuja and not ACC? It's still trading below replacement cost, right? Why a hold on ACC?
So I'll take your second question first. If you look at all the acquisitions that has happened with the group or with Adani Cement, have all been led by Ambuja. So clearly, Ambuja is the focus for the company. ACC is definitely is one of the subsidiaries for Ambuja. But I think the growth focus will be Ambuja. That is where the promoter fund infusion also was last year. And like I said, all acquisitions are led by Ambuja. So that's where Ambuja is clearly the favorite versus an ACC.
And what about Grasim versus Ultratech Cement? You're positive on both of them. Most of Grasim's current value comes in for Ultratech. But there's that paint angle that will play out as well in the coming year. Preference between these two?
No, I'm equally positive on both, but between them, I'll choose Grasim definitely because not just cement, and as you rightly pointed, it's contributes about 60% to the SOTP, but we are getting a very encouraging feedback from our channel checks on the paint front as well. Even in the previous quarter, I think they fairly, the revenues reported by the paint segment was pretty encouraging, and on-ground channel checks suggest that paint is gaining fair amount of traction. So there is a double tailwind for Grasim, and that's why we'll see a precedence in terms of the preference over Ultratech.
Okay, all right. So Grasim over Ultratech. Got that, Naveen. Thank you very much for that quick stopover, helping us figure out how to look at cement stocks, considering there's excitement around, maybe finally a price hike coming through. The pre-open has settled 91 points higher, but the stock we need to focus on is ITC, the CNBC-TV18 exclusive. The market's taking note of it. Is there more taxation happening for this stock? We'll get Mangalam in just the next couple of minutes to figure out how to look at ITC. But right now, quick trading calls coming up with our technical experts. Mitesh, what's the stock you'll go with?
I'll go with the buy on Dalmia Bharat Cements for targets of 1950.
And Sudarshan?
Well, consider buying M&M Finance with a stop under 270.
Okay, all right, gentlemen, thanks very much. Now let's go to Mangalam and figure out ITC. 35%, some sort of a special GST tax, maybe. It's scaring the market already, Mangalam.
Well, it's a fair amount of variables out here, you know. So just to put the news out, sources tell our colleague Timsy that the GOM is likely to propose a new special rate of 35% on tobacco and tobacco products as well as aerated beverages. Now, the key to track from here on is this increase from 28% to 35% over and above the already, charge compensation cess, or is it in lieu of it? And that opens up three scenarios for us. One, if it's over and above the cess, it could mean an increase of anywhere between 5 to 12% over, what the current tax incidence is. And these are back of the envelope calculations I just made. If it is in lieu of just the ad valorem portion of the cess. Now, remember, the cess has a fixed portion and an ad valorem portion. Then it is largely tax neutral. And if it is in lieu of the entire portion of the cess, it takes the overall tax, incidence lower by about 20%. Assuming the worst case scenario where this 28% turns into 35% and the company still has to pay the compensation cess, which is both specific and ad valorem, it would mean a portfolio-wide price hike of anywhere around 5%, or an EBIT hit of a little over 5% across the portfolio. But remember, these are all just possibilities right now and probabilities. And over the last 7-8 years, there hasn't been a significant change in the taxation for cigarettes. So even if this does happen, chances are it might just be a one-time negative. And from there on itself, things will move on after the street has accounted for this increase.
All right, Mangalam, thank you very much for that. It's been my long-standing belief that with cigarettes, nobody quits smoking because prices went
smoke,
up.
Come what may.
No, the only way you quit is because you want to quit. Prices have gone up, not recently, but they've gone up over the last 10-15 years. But I think India is one of the few countries where cigarette volume sales are still growing. In the US, cigarette volume sales are down. It's like a 45-degree angle for the last 50 years.
Wow.
Anyway,
But I guess it leads to a bit of an overhang. You don't know. And like one of the guests also said, then there's a budget coming up. Now they're going to tinker with that, cess.
It increases uncertainty, but we'll see. But 2.5% lower. The other one, of course, is footwear. I thought Mangalam will mention that since he's as he calls himself, a sneakerhead. We'll talk about that as well. Metro brands. All these quote-unquote premiumization plays. And I think we'll have to sort of get around that as well. 100 points higher on the Nifty and a 200-point pop on the sensex is what we have. This is the first rate coming up on the Nifty and the sensex. Bank Nifty is up about 0.25% as well, 52,277. What else? Mid-cap index is up about 0.6%. So last week, mid and small caps outperformed massively. Yesterday, they outperformed the Nifty and the sensex, and this morning is where I think the start at least is more in the broader markets. The Nifty heat map coming up as well. I think you've got a few stocks lower. ITC is there in the red, but the majority of what is starting is up in the green at this stage. 1,200 stocks are higher and about 400 stocks are lower, although this is still under 1 minute of market open. Let's get to stocks. Surabhi.
Absolutely. Just to complete this GST issue before I go back to the Nifty, look at a stock called Vedant Fashions. This is the company that runs the Manyavar brand. And now, if luxury is defined as clothing above, say, 15,000 rupees or 20,000 rupees, it'll impact Manyavar because their average selling price is usually on the higher side. It's wedding wear. So Vedant Fashion already down almost 5%. Watch out for this one. Even VST Industries is down 1.5%, as is ITC. So the GST impact is playing out on individual stocks. Okay, let's come back to the Nifty. Titan is slightly lower as well because, again, this is linked to GST. There is some talk about higher value or higher priced watches also being taxed in a higher way. But what's the cutoff threshold? We have to watch out for some of these things. What else is negative in the market? Bharti Airtel is slightly lower. ICICI Bank, Infosys, these are stocks on the lower side as well. However, offsetting that are names like JSW Steel, 2.5% on the higher side. Tata Steel, ONGC, some of these commodity companies are doing well. Shriram Finance is having a good morning, 2% higher. Adani Ports is up and about. HDFC Bank is doing well. Actually, the bank nifty is holding up the market, you'd have to say, with a gain of almost 0.5%. SBI, HDFC Bank, a lot of these bigger names. Otherwise, it's a little flat. But yes, some of the steel makers are, really shining bright. And then there are the banks, which are doing well. Nigel.
Well, that's right. Indegene, that stock is one of the big losers because of that large trade that had to take place. So that one's down. GST tinkering is weighing on ITC, Varun Beverages as well. Both those two stocks are lower in today's trading session. In terms of stocks that are doing well, you have Solar Industries, massive order win. Well, that one, in fact, is one of the top gainers that we're seeing today. So keep an eye out on that one. Arcade, another one that listed in the last 1 year or so. Volumes rather high, unusually high actually. Arcade is the one that's up close to around 8%. So keep an eye out on that stock as well. A few more gainers should come up for you on the screen. You have Genus Power that's moving well, large volumes. Swiggy will be reporting its numbers. Some optimism building in there. So that stock is well, making a close to a fresh high that from the time it's listed. Ola Electric is another one that's doing quite well. So quite a few of these names are doing well. I'll tell you what, the Nifty gapped up with a gain of close to around 100 points. That was a bit tricky for the bulls because you can't chase that sort of an opening. So now the resistance for the day comes in at today's high, which is closer to around the 24,400 odd mark. That's the important resistance mark. We'll have to get past that. But after underperforming for the last couple of sessions, you have the Nifty Bank that is now up close to around 0.5%. And it's outperforming for today.
Absolutely, and we'll see if it's got more in it. But we've got a 30-point gain now on the Nifty. Policy Bazaar is another one which is up about 2% or so, and that is looking at about almost 2,000 rupees. It's taken a while, Policy Bazaar, to come back to take out the earlier highs. Remember, it went into a bit of a flux once they said that they wanted to get into managed healthcare kind of operations, and there was buzz whether they're going to get into hospitals, etc. Stock had fallen sharply to almost about 1,500 odd rupee levels, back at 2,000 now, Policy Bazaar, and they've got large volumes as well. Cochin Shipbuilders. 5 days back, 5 sessions back, stock was at about 1,260. Stock's at 1,725 in 5 sessions. So that's a big move coming through. And I think even names like Mazgaon and Garden Reach have recovered quite nicely over the last 5-6 days. Inox Wind, I think there is news flow, which we highlighted, 6% on Inox Wind. It's got huge volumes for this point in the day. Torrent Power, I think we did highlight earlier. A stock called Black Buck, which is recent listing, is about 5-6 days old. It's down. It's up about 1%, but was a circuit up yesterday. Black Buck. We've got Precall. Vivek had highlighted. Sud had highlighted the acquisition there. Manappuram is up about 3.5%, so it's coming up with some decent kind of gains. EPAC is back up 5%. Was up 5% yesterday as well. So broader markets are doing very, very well at this stage. There's a small company called Wanbury. It's coming up with some volume, so just want to highlight that as well before we look at other stuff right now.
Just mentioning Swiggy as well. The start was so quiet for this company, right? It's listed, started reporting its first numbers today after listing, and there's so much excitement. Anyway, it's sort of picked up in a nice fashion post-listing. The stock's done really well, and the anticipation is that maybe they'll have a very positive commentary to share today after those numbers.
And there are 2 large trades that have taken place. TBO Tech, that's a newly listed company. So massive volume out there. Explains why the stock is down close to 6%. Some change of hands taking place there. And Zentech is the other one that's been a big outperformer. That one's down close to 5%, but that one as well, a large trade out there. We'll try to get in both those 2 managements and find out more with regard to who are the participants on both these 2 names.
I think Mangalam was talking about beverages, right?
Yeah,
higher GST. Varun Beverages down 3.5. It's the second largest volume traded name at this point as far as open is concerned. Gautam Shah is now joining us, founder and chief strategist, Goldilocks Premium Research. Gautam, good morning. Good to have you with us here. Thank you for your time. So have we put the correction behind us, Gautam? What's your sense?
Good morning, Prashant. Well, looks like. I think the manner in which indices have handled adverse news flow, and we've got a lot of it in the last 6 weeks, I think is enough testimony that the markets are internally strong. I think the GDP numbers, which pretty much shocked everybody, and everybody was concerned how the market is going to handle it on Monday, which was yesterday, and the fact that we closed in the green just tells you that the GDP number of last Friday was discounted over the last 6 weeks. And that's probably the reason Indian markets fell 10% while world markets remained quite strong. So I do believe that the market could have formed a bottom at the recent low. We were anyway looking at some serious support around 23,300. That seems to have worked. The price action has looked good. The screen has looked good. A lot of stocks have come back very, very strongly. And I think the final nail would be once the Nifty gets past that 24,500 number, which I think is the final resistance. And once we are above it, I think you can confidently say that the uptrend is back in track. So I do believe that this breakout is coming. December is usually a soft month, a relaxed month. And given the data points, it does look like that breakout is coming. And once confirmed, you could see the Nifty move towards a level of 25,200. But I still believe that this is a stock and a sector-specific market. Don't anticipate something serious happening on the Nifty on the way up or on the way down, because I think there is a battle between domestic money and the economic slowdown, which is being debated and talked about. But the overall trend and trajectory is still up, and I don't think we are going to make new lows anytime soon.
Okay, that will be great. To hear for a lot of people out there who've been reeling under this correction, Gautam. Just confirming the levels. Above what level of a breakout do you see the Nifty heading to 25,200? What's the watch point now?
See, as I said, we've already rallied about 1,000 points from the recent low. And I think the moving averages and based on a number of studies, 24,500 for us is the line in the sand. Once we are past this number, I think the bulls will take greater control over the setup. And I think that's when the momentum is going to get better. Because in the last 6 to 7 days, the market has still confused a lot of market participants. But I'm tempted to believe that the market will find support on every dip like what it's done in the last 2 weeks.
Okay, so 24,500, if that's crossed, then, well, the strip is going higher. Got that. So what's the trade? What's the best long side trade? Not from a 1 week or 10-day perspective, but I'm saying next 2-3 months then.
Well, yesterday we released our big picture report wherein we made a very clear point that the manner in which Bank Nifty, held out in the last 6 weeks while the Nifty corrected 10% is not something we've seen in the last 3 years. So there is a clear message from the market that banking is an outperformer and is likely to do well. And I do believe that the Bank Nifty breakout above 52,500 is coming. If that were to get confirmed, you are likely to see Bank Nifty hit new highs much ahead of the Nifty and much faster of the Nifty. And our working target for the banking index is about 55,000. The fact that you have HDFC Bank at lifetime highs, whereas the Nifty is still 8% away from its lifetime highs, is a major takeaway in itself. So I think banks and IT are the real opportunity. I do see across the board strength in banks. And the IT index, which is already trading at lifetime highs, I think has some excellent charts, great momentum, possibly a 46,000 number on the IT index near term and a 50,000 number over the medium term.
Okay, hi Gautam. Good to hear you today. You're sounding quite pepped up, and you believe that the market has a higher likelihood of moving up than moving down. So that's good news. But you mentioned a couple of names. HDFC Bank, it's come out of its slumber and now, in fact, it's gunning for higher levels, which is great news for the banking index as well as for the Nifty because that was, not able to perform in the recent past. What levels are that one going to test? And what about Reliance Industries? At the start of the series, we had a couple of experts who joined in and they were talking about the short positions at the highest levels we have seen ever. Where is that one headed, Reliance Industries? Because it's been an underperformer for past 6 months.
I think the underperformance will continue. And in fact, if somebody took a pair trade of long HDFC Bank and short Reliance, I think that trade has worked wonderfully in the last 6 months. In fact, that's been our stance. And the fact that the open interest on the short side is so high in Reliance Industries and the reason why that could be, see some short covering just on account of that, I think that's not the right way to think about it. Reliance remains an underperformer, and I think it's going to remain this way for many more weeks to come. I don't see the outperformance returning anytime soon. Whereas HDFC Bank has handled a very difficult period really well. And I think this market has moved from growth to value. And many of these top stocks which have done well in the last 6 weeks have typically become, have been value stocks. So I do believe that over the next few months, we should see an HDFC Bank easily move towards a level of 2,000 and maybe do plus. And apart from HDFC, we also like SBI, where we feel that a 20-25% up move is coming, along with ICICI Bank. So the key message is, in each of the major sectors, stick to the big boys. And apart from the banks, I think if there are two dark horse sectors, which I think can really outperform over the next 3 to 6 months, that would be real estate and metals. Real estate coming out of a 6-month consolidation, and metals has been at the lower end of the range. And I do believe over the next 1 year, it could do something special.
And this morning, I think we got this call from UBS as well on real estate. And of course, metals is something else you're pointing out to right now. NTPC Green, by the way, I'm just highlighting that it was not there in the mix. The stock will come up on your screen. It suddenly shot up to being the second largest volume-led gainer, right behind Swiggy. Swiggy is given up 4% from the day's high. NTPC Green is up 5%. It started kind of flattish and then picked up quite a bit through the course of the initial few minutes or so. Gautam, in metals, what exactly do you want to name names?
If you look at the last 4 to 5 months on the metals index itself, 86 has been a sort of a floor and 10,400 has been a ceiling. We have been oscillating within the same. We've handled a lot of news flow from China, and on account of that, we've seen a lot of volatility. But the charts are clearly very well placed, and I think the new wave on the upside is what metals could see over the next 12 to 18 months. You'll have to play slightly long term and not short term. And I think some of the top stocks like JSW Steel, JSPL, Hindalco, Tata Steel, in fact, the entire basket, even a Nalco, which has been such a big outperformer, we like the entire basket, and not to forget Vedanta, which I think is also at a important medium-term support. So the idea is, if you want to play a basket in metals over the next 12 to 18 months, I think you are going to grossly beat the Nifty, and that's probably been our stance.
And what in real estate? Just 2 or 3 top ideas, best bets?
See, real estate, when the breakout happened a couple of years back, we always believed that this is a structural story, because what I heard on the ground and what I saw on the screen, I think there was a clear match, which was good to see. 6 months back, everything got a little out of hand. It needed a nice long consolidation, which happened. DLF remains our top pick, and I think at levels of 830-40, there is not much to lose, and there is potentially 30 to 40% to gain. Again, in all the sectors, I'm sticking to the big boys. So I'm still very comfortable with DLF, Oberoi Realty, and Godrej Properties, and I expect these 3 stocks to deliver serious returns. And I also expect the real estate index to make new highs over the next few months.
Okay. You know, Gautam, in all this, I was just going back to a conversation we were having with a global guest earlier on in the show. The thing is that, and it's great to hear that you're finally, sounding optimistic on the Indian market. But I guess internationally, the big trade still seems to be buy America, everything America, right? Well, the dollar higher, equities higher, etc. So how do you see the next, say, month or two till we get into full-fledged back into January play out? Will it still be primarily US market driven? Yields have now started cooling off. The dollar is still pretty strong. I mean, can India move higher now in step with the US? Because till now it's been an absolute underperformance last 2-3 months.
Yeah, I think that's a great point. In fact, in one of our reports yesterday, we shared the view that if you look at the last 10 years of data, the Dow and the Nifty have pretty much moved hand in hand. And it's just been top in the Dow leads to a top in the Nifty, bottom in the Dow leads to a bottom in the Nifty. It's happened for the last 10 years. We put out a lovely correlation chart there. For the first time in many, many years, in the last 2 months, you saw the Dow making new highs and the Nifty going through a 10% correction, which I think baffled everybody. And I do believe that the internal GDP numbers was really responsible for this underperformance. People talk about FI selling and valuations and all of that, but I think that was getting priced in. Now it seems that this disconnect, which was there for a short period, is going to correct. So Indian markets will move higher and US markets will remain steady, because when I look at the top stocks in the US and the fact that the Russell 2000 in the US markets have gone to hit new lifetime highs, which I think is an event in itself, because everybody was complaining that the top stocks were doing well and the Russell 2000 was not doing well. So I think India and US going forward will move hand in hand, and the US market setup remains positive, and I'm looking at another 10-12% upside for all the headline indices there.
Okay, another 10% upside, right? Even in the US market for the key indices. All right, so good times. Perhaps Santa Claus indeed is coming to town. Thank you so much for joining in, Gautam. Pleasure having you on the show as always, and look forward to more conversations soon. Let's now quickly do a check on how the market's shaping up before we move to our next guest. It's steady, about 20-23 points higher on the Nifty, so not too much of a problem. It's a great morning for mid-caps once again. The outperformance really is in the broader market. So that's how we're looking at this Tuesday morning setup. With that, let's now put the spotlight on the digital banking landscape in the country. There seems to be a lot of competition, a lot of new fintech players coming in. Incumbents like big giants, big private sector giants, as well as the PSU giants are looking to up their digital game as well. HDFC Bank has also set up something called the Smart Hub Vyapar app. Clearly, they are trying to sort of attract more of the mid-market merchants onto this digital platform. So what are we looking at over the next 1 year or so in the fintech space? What is the growth outlook? To talk about this, we have with us Mr. Parag Rao, Country Head Payments, Liability Products, Consumer Finance and Marketing at HDFC Bank. Thank you very much for joining us, Mr. Rao. Great to have you on the program. And so the sort of thought process behind having this conversation is to really understand how large incumbent banks like HDFC Bank, how are they turning on the competition to a lot of the fintechs that have had an early start in terms of digital adoption, whether it's payments or onboarding, newer customers. And all this is happening against the backdrop of a regulator watching with a hawk eye and pulling up banks, pulling up NBFCs and fintechs for whatever lapses that there would be in the digital platform. Your opening thoughts, sir.
Okay, fine. So I think the thought process is pretty clear. One is at an economic front, as you see, the consumption is growing on an overall basis. We're growing. We've got a great outlook over the next many years for consumption growth and GDP growth. That's number one. As a very large bank, we are in the midst of driving a lot of, our products drive a lot of this consumption-based growth for India. We have the entire suite of financial service products. We are the market leader in acceptance in the acquiring business, in excess of 40%. The products which these small and medium merchants actually require in the financial services space, the entire suite we offer. We are the largest payment services provider in the country as a bank. And so therefore, also when you look at our retail presence, we have amongst the largest branch networks in the country. We source a lot of our financial services through the branches. There's a deep connect with rural and semi-rural India. All of this makes for 2 or 3 great assets. So we know our customer. We've got great distribution across the length and breadth of the country. We have a full suite of products. Come in digital. In today's landscape, I won't go through the entire landscape of how the digital India has grown, but suffice it to say that customers and even merchants and MSME require digital solutions on top of their conventional solutions. So banking is now taken 2 forms. There's the conventional banking, there's a face-to-face banking, there's also digital banking. And banks need to continue offering digital solutions to cater to many needs of the customers, including the newer set of customers.
Parag, hi, good morning. And good morning, Prashant here. Good to see you again back in the program. Apologies to interrupt you there. Can you hear me? Can you hear me, Parag? Good morning. Prashant here.
Sorry, just lost your connection.
Can you hear me?
Sorry. Yes, I just lost your connection, yeah.
Okay, but we're back on, right? Sorry to interrupt. Sorry, paucity of time, so and apologies to rush you along. But it was a good summary. So just a couple of points, Parag. So do you believe, first of all, so credit growth has come off across segments, not just for you, but for the entire industry. I mean, everything has come off compared to where growth rates were 1 year ago. We recently got the GDP growth numbers. Many believe that a lot of this has been driven by regulatory measures. I mean, for example, fintech as a space, etc., is largely...
I'm sorry, Prashant, to interview. Sorry, I'm not able to hear you clearly at all. I'm sorry, Prashant, connection is too poor.
Okay, I think what we'll do is, Parag, we'll just get that connection back on, and we'll have you back on in just a bit from now. Let's just take a quick look at the sort of first. A couple of stocks actually. So Swiggy is, of course, top of the list in terms of gainers, 4%. And NTPC Green now is the big mover. 4% earlier when I highlighted 6.5%. I think it was up almost about being 8% in the green. And of course, there is some of the other stuff which is all coming up as well. You've got BLS, that is Bombay, London, Singapore, the visa company, 4% higher. Zuari is up 4%. Indoco is up 5.5%. Acme Solar is up 3.5%. And of course, some of the other stuff like EPAC durables, etc. we highlighted earlier, and they continue to be going pretty strong as well. So more names and more stuff which is moving. Premier Energy is down 2.5%. That's a recent listing. It's well owned and well tracked. So that's got some large volumes as well. And ITC is still there with about 2.5% cut. Varun Beverages is down about 2% right now. So, it's on the Nifty. It's a bit of a slower kind of start. But actually, it was a fast start. Now it's a little slower. 35 points is all that the Nifty has on it. Let's actually revisit that GST story with Mangalam. And of course, implications for cigarettes, but also footwear. Mangalam, I was wondering earlier whether you would bring that in. Go on, Mangalam.
For footwear, the thing is that unfortunately there are no listed companies, not many in the listed universe that would get immediately impacted, because India as a market is more value sensitive. So majority of the footwear is still sold under 500 rupees per pair itself. So 10,000 rupees to that extent becomes a very small universe itself. So might not be as big an impact on the listed players, but I'm sure for the kind of shoes that you and all the others buy, maybe a little more than that. For me, not a problem, because I usually buy sport shoes, which unfortunately, are not any of these companies which are listed in India itself. Having said all of that, ITC is currently lower, largely because of the possibility of that GST incidence increasing from 28% to 35%. There are three possible scenarios what you have to look at, whether it is in lieu of the compensation cess or whether it is over and above that. If it is in lieu of the compensation cess, there are two parts to the compensation cess as well, which is one specific and ad valorem. What we understand is that the GOM has also sought an extension to this compensation cess itself. So let's look at the worst case scenario where this is an increase over and above the cess as it were in its current form. So the total tax incidence would increase anywhere between 7 to 12 odd %. And as a result of which, the companies may have to take a price hike of anywhere between 3 to 5%. These are back of the envelope calculations. And, if they don't take that, then there could be a hit on the EBIT to the tune of around 5 to 7 odd % as well. Similar is the case for Varun Beverages. For a lot of these aerated drinks, it is excise duty plus that 28% GST. So that 28% turns into 35%. So to that extent, we would see an impact on their overall tax incidence itself. The companies usually, would be hurt a lot more in the beverages space, largely because India is a price-sensitive market. So a 5, 10, 15 rupee bottle cannot be sold at 16 or 17 rupees. So they'll have to manage that. So to that extent, there might be a slightly bigger hit on the EBIT. The stocks are lower. But again, because this is just a possibility and nothing formalized yet, these stocks have seen some recovery from the lows itself.
Mangalam, thank you very much for that. Parag Rao is with us. I think we've re-established that connection. Parag, apologies for that. Got you in a bad line. I hope you can hear me clearly. Prashant this side. My question to you is, do you think, as we head into 2025, some of the regulatory scrutiny, and 2024 was about RBI cracking the whip. Do you think, and that, of course, has also affected consumption, etc., because bank credit has tightened quite a bit. Lending has tightened quite a bit. Do you think it'll ease off?
Okay. Well, let me put it this way. I think the changes or the introductions which the regulator brought in were, in my parlance, as we call, corrections. In a rapidly growing market, you see some aberrations coming up in some parts of the economy. Some of the actions taken by the regulator were more to correct it. I think the policy which the regulator is rolling out is pro-growth. Their thought is to really encourage growth, but then you need to ensure that aberrations don't happen in the marketplace. So some of these are corrections, if you make also. So we look at it as imminent parts of the whole journey which we go through. Regulation is there to exist, and it's, I think, required. But outlook on growth is robust.
Right. Parag, got that. Another question. Unsecured has kind of slowed down quite sharply. It's not new. It's been happening for the last many quarters. As that has gone down, is the reliance on cards increasing, or do you see? That's like a proxy to unsecured lending. Do you see a pickup in that in spending on cards?
Well, yes and no. So cards is part of unsecured, it's part of the entire unsecured lending space. And on overall basis, if you see, I think there's been a slowdown in the growth of unsecured lending. So that's one part. Having said this, I think within the entire payment space, UPI today continues to demonstrate the highest percentage growth. The next is credit cards. Credit cards, is the way we look at it in the bank, is a natural extension to millions of consumers who are on UPI, and so that's a natural progression of the next product which you do. So we see credit cards also growing robustly.
So, Mr. Rao, if you could give us some sense that, let's say for HDFC Bank itself, considering digital is becoming such a huge channel now, if we talk about the lending side, whether it's unsecured consumer finance or whether it is even sort of reaching some of the MSMEs or the smaller companies, how much will the digital channel contribute? And similarly, if I talk about onboarding customers, because the RBI has been very cautious about digital-only loans or the digital-only customers as well. And in terms of onboarding more customers, what can we expect in the coming year for HDFC Bank per se? Some numbers or some rough data points will help.
Well, I can talk to you about the digitization percentage. Well, the entire MSME sector, if you see, is traditionally is all about documentation, physical meeting, contact point verification, so on and so forth. So we've been able to successfully digitize a large portion of the journey. Admittedly, I think it's not yet 100%, but depending on what kind of product, the digitization, let's say in the acquisition and the onboarding space, ranges from anywhere between 30-40% going up to almost 80%. That's helped bring a lot of efficiency, and it's also helped in your do-it-yourself kind of acquisition. So, for example, our Smart Hub Vyapar, which we talked about a little earlier, is our digital merchant app. Close to about 95% of the onboarding journey is digital, and you get merchants can just download the app from the Play Store and become merchants within a couple of minutes. They can start UPI transactions within minutes. So that's an example of the digitization journey which we've done. Similarly, if you look at, say, underwriting, which is more of a back-end function, anywhere between 40 to 50% today on an average across asset categories, both secured and unsecured, is completely digitized. In some cases, we go as almost as high as 90 to 100%, especially in our instant loans, which we...
No, so can you hear me? Yeah.
Yeah.
Yeah, so my question was more in terms of adding to the business, adding to the book, while of course digitization is a massive part at the back end of existing customers as well. If I were to ask you in a very simple way, if you look at the extent or the component of the business that's coming in, X of branches, not physical branches, the digital only business. Now, whether it is in consumer finance, whether it is on the mid-market book, the MSME book, how much incremental growth can come in from the digital channel alone for HDFC Bank? Will it add incrementally 5% to the overall assets under management in these different segments, 10%? Just trying to get that sense.
Okay, so let me put it this way. Our book is very large, so, giving a percentage will sort of distort the picture. But let me put it on an incremental basis, depending on the category of building. So, for example, in credit cards, close to almost 70 to 80% of our incremental acquisition is digital. Depending on the asset category which you have, again, that percentage ranges between 25% to almost 40-45%. So that's the contribution on an incremental basis. And as the years go by, obviously, it will build up into our stock.
Parag, just one more question. I mean, you're the largest private sector bank, and you've got a real pulse, right, sitting in the center of all of it. Some concern that maybe, over the last couple of years, we had top-end consumption, which really propelled things, right? Bottom-end, not so much at all. Now, the concern is top-end is kind of maxing out. The middle layer is not really firing yet. Maybe it needs some help. And the bottom end, of course, is where it is. Do you think we're at the stage where we need sort of help, either monetary-wise or fiscal-wise? Just wanted a quick word, Parag.
I don't think so. I think these are again blips which come in, aberrations which come in during the course of a high growth trajectory which the economy clearly shows. I think the infrastructure is in place. We see a lot of consumption happening, and it's been happening steadily post-pandemic. some corrections would happen. You see that happening in many sectors. So I don't think this is cause for worry. We've got inflation under control. We've got the investments putting in both by the government and the private sector about starting. I think so. We've got a good trajectory of growth. We've got to ensure that some of these aberrations we take care of very well, so that you can ensure a smooth growth path.
Okay, all right. We'll leave it there. Parag, thank you very much. Short conversation. Had more questions, but out of time. Apologies for that technical trouble earlier. So that's Parag from HDFC Bank with a perspective on credit growth and everything else which is happening as far as banking is concerned. But time for a Nigella Auto conversation. Bajaj Auto Management is with us.
Well, that's right. Let's focus on Bajaj Auto. The November sales numbers were in line with estimates. Exports surging close to 24% on a year-on-year basis for the month of November. The EV share as well has improved. To understand about the past quarter, both domestically as well as the exports, and how their share in the EV market is ramping up, we have with us Mr. Rakesh Sharma, the Executive Director at Bajaj Auto. Hi, Mr. Sharma. Good morning and good to see you, Ben. Well, first up, let's talk about the domestic market. Was the festive season as good as you expected? The broad feedback is that the two-wheelers actually had a pretty good time. Was it as good? If you could give us a growth on that front. And also if you could give us a hint about the exports, particularly Nigeria, as you have told us in the past, from 20,000, 25,000, 30,000 is what Nigeria did. Has it improved even from there?
Good morning. Yes, indeed, there was something to cheer about for the festive season. It started a little bit slowly, but in the second half of the festive season, particularly in the north, which is driven by Diwali, there was a real surge. And as a result of which, I think it has lifted the industry performance. First half, the industry was at about growth of about 6% odd, but now with this movement, I think we are looking at a nice 6 to 8% outlook for industry growth. And as has been happening, the top half of the industry, which is the 125cc plus segment, grew faster than the bottom half. It continues to do so. And I think going forward, that same pattern should continue.
Okay, and so domestically, 6 to 8% is what you're working with in terms of an industry growth for the year, right?
Yes, absolutely, at an overall level, but the upper half should be in double digits.
Got it. And what about your market share according to your calculations? And the earlier question that I asked you about Nigeria, give us an update out there. It's been looking better.
Sure. So I think as the dust is settling, because, it's a very hectic period for registrations, etc. But as the dust is settling, our understanding is that the market shares the competitive positions are more or less the same. Our strategic focus, as you know, the focus area is the 125cc plus segment, where we hold a solid number 2 position at about 24-25% in that kind of a zone, which is about, just a few percentage points behind leadership. So going forward with Freedom, which is the new CNG bike, and some new launches, particularly aimed at youthful segments in Pulsar, we will be trying to beat the pace of growth for the upper half of the industry. And Nigeria, like you asked, continues to show steady performance. If you will recall, I think September we retailed about 25,000 units, and October was about 33. And the retail numbers which just came in yesterday for November put Nigeria retails for us at 36,000. So that's a nice improvement. We hope to hold it steady in December, but December, by the end of the month towards Christmas, the market sort of shuts down. But innately, the retails are definitely showing a month-by-month improvement.
Okay, so the export market's also looking steady. You're looking to build on market share here in the domestic arena as well. Mr. Sharma, good morning. Speaking of market share, let's get to the hot debate on EVs, right? Because there, you've been taking big strides. And I think now Sudarshan tells us, our colleague, that now I think market share has moved up another 200 basis points. You're number 3, I think, right now in the pecking order at about 22% market share. Now, what's, what do you see ahead? Next 6 months, will you take the number 2 spot? Are you gunning for number 1? And I ask you this in context of the competition. I mean, Ola has launched, a couple of new models, and they've come out with very aggressive pricing. Just tell us what would be the average price differential now, and whether this is at all a concern for you, and what's the market share you are hoping to have in EVs, say, a couple of months down the line?
Yeah, I would rather look at the momentum. We were 13% a year back last November, and now we are 22%. But, and not so much at the numeric position, because really between the top 3, the difference is only of 3,000 units odd, something like that, And frankly speaking, the number 1 position is of value only when you have a strong competitive ratio. That drives the business value. Otherwise, it does give you a little bit of a bragging right. But what we would want to do over a longer term is not just aim for a numeric position, but really solidly enhance our competitive ratio, which hopefully will then put us in some kind of a commanding position in the industry. And as far as sorry?
Yeah, the other point on this competitive pricing, I think the competitor is now offering products, I think, correct me if I'm wrong, 44,000, 45,000 onwards. It's really aggressive. What does that do to the pitch?
Well, we have not seen the product. It's been flashed on the media, and what exactly that price includes and what are the total specs, etc. Before I make a comment about the impact of what competition is doing, one would really like to see it and understand it. Of course, it is very welcome to widen this industry if it is done on a sustainable basis. And certainly, we have a product pipeline beginning probably next 48 hours. We will be starting production of our new platform. And in the next 5-6 months, you will see solid reinforcement of our portfolio.
Okay. Mr. Sharma, hi, good morning. Prashant here. Now, this is a more industry level question. And this is true, this has been true for the last many months. There's a big gap between, Vahan data and the wholesale data for pretty much every player, and it is persisting. So, for example, in Bajaj's case, domestic registrations for the month of November were about 3.43 lakhs. Wholesales have come in about 2.41. And similarly, it's true for other companies as well. Could you tell us what's happening, and by when will this get corrected, or you think this is going to go on for some more time?
I think you see, what happens is that the huge surge which is there in 15 days of pre and slightly post Diwali, it is very difficult for the RTOs to cope up with that kind of a pressure on registration. So that's why the registrations on the Vahan portal spill over from the festive, which this year, as you know, was late October, and spill over well into November. And you will see that by the time the wholesales and the retail start to converge, one will have to really look at the December data. It's not anything unusual. You see, the whole process starts actually September onwards, when companies start to build up the channel inventory so that this spike can be serviced, right? It's a two-tier distribution in the two-wheeler industry, and the stock buildup takes time. So you will see wholesales ahead of retails by a fair margin in September also. And then there is this surge and they start to catch up. So really, it is this 3-4 months. One has to be very cautious about looking at limited time horizons and trying to extrapolate either for the company or for the industry on that basis.
So it's not as if, if Vahan data lags, wholesales or Vahan data, it's not one picks up and the other slows down. I mean, it's just bunched up sort of registrations happening together because of the
it's a lead lag effect. And sooner or later, there will be convergence unless someone goes crazy and is just billing or doing wholesales, which I don't think is the case.
All right, Mr. Sharma, I would like to know about your new launches as well. And the Triumph, well, I think it did pretty well initially. But any new launches on that front, bigger bikes, I'll be personally very interested. So if you could update us on that. And I think the EV bike is something that you'll have spoken about as well. So how soon before we see that launch?
Yeah, so we did have I don't know if you missed it, that we did have a very nice introduction to the expansion of the Triumph range with what we call the Speed T4, which expands this modern classic portfolio now, which we have the Speed 400 and we had the Scrambler. What the T4 does is to, address the customer who wants to get into modern classics, which is the classic style with superior performance, but wants an easier riding and a friendly riding experience. And so we've got that covered with the expansion of the T4. The other thing which has happened significantly is that a slew of big bikes have been launched by KTM just about 2 weeks back. And these fundamentally address the adventure in the sports segment, bringing to the customer the absolute latest and the world-class bikes of KTM. And that was just done about 2 weeks back. The Triumph big bike portfolio, we are pressing ahead on it, and slowly but steadily, it is doing well and expanding. When you put all of this together, combined with all the kind of action on the ground to build motorsports, I think we are trying to engage with some fundamental drivers which will expand this market at the very top end.
Okay.
Mr. Sharma, when I want a bigger bike, I'm looking at the 650, 700cc plus, so that's what I refer to. But the T4, I recall you did that a couple of months or so ago. But thanks a lot for joining in. You're sounding reasonably optimistic about business prospects. Next time around, we'll delve a little bit more into this EV vertical, in particular with regard to sourcing of cells as well.
Nigel, just want to mention, look at the bank Nifty. Yeah. The Nifty is quiet. The whole trade is on the hopes that there's a CRR cut coming on Friday. That would be my sense. You just heard Rajiv Anand rally behind that possibility as well, saying it would be a huge welcome relief. And a lot of economists that we've been speaking with, Lata sort of had the same view at the CNBC-TV18 Citizens Monetary Policy Committee as well, that maybe not a repo rate cut, a CRR cut would be a direct way to inject more confidence, liquidity into the markets. And maybe that is what's powering this move on the banking side. More on this in just a bit. We'll take a break, come back with markets full throttle and get you a lot of the interesting stocks to track, plus some trading ideas with Mitesh. Welcome back. Let's quickly revisit the big news on GST. We've got Tim C back with us on the proposals that the GOM could be taking to the GST Council. Tim C.
Well, yes, as you rightly said, the group of ministers on rate rationalization formed by the GST Council is likely to have prepared its final report. They met yesterday evening in New Delhi, and the consensus that they have arrived at is that there should be a new special rate added to the 4-slab structure of GST of 35%. But this 35% should be applicable only on tobacco and tobacco products and aerated beverages, for making up for the potential revenue loss that the council and all the states are likely to face because of several rate rationalization ideas that they have proposed. There are about 148 items on which they propose rate rationalization, along with the additional items of health insurance and life insurance premium. Now, just to begin with, what are these 148 items that could have been in this list? Firstly, ready-made garments. They say that it should be based on the price points, the taxable limit. So any ready-made garment below 1,500 rupees should be taxed at 5%. above 1,500 till 10,000 rupees should be taxed at 18%, and any ready-made garment costing more than 10,000 rupees per garment should be taxed at 28%. Similarly, they propose brackets for watches, for luxury handbags, for footwear, for cosmetics, that these items should be taxed based on their pricing, considering that the luxury bit should be taxed at 28%, mid-segment should be taxed at 12 or 18%, and lower segment should be taxed around 5 or 12%, depending upon the pricing. That is what their suggestions is. Apart from that, they say that there should be a massive rate reduction on common use items, on the items which people like you and me use daily, say exercise books that our children use, should be reduced from 12% to 5%. Similarly, bottled water, which comes in a can of 20 litre plus, should be reduced to around 5 and 12%. So all these suggestions have been packed in a report which will be presented to the GST Council on 21st of December, which is slated to meet in Jaisalmer. So all eyes there. And yes, another break that they have proposed, that is a separate panel on health insurance and life insurance, is that when it comes to life insurance, pure term life insurance premium should be completely exempt for everyone from current 18% GST to 0%. And when it comes to health insurance, for senior citizens, health insurance premium should be exempted completely from again 18% to 0%. And for non-senior citizens, they've carved out two categories. For cover up to 5 lakh rupees should be exempt, and for cover beyond 5 lakh rupees should be taxed at 5%. Again, these two categories were currently charged at 18%. So there's a huge potential revenue loss that is going to happen. And to make up for that revenue loss, they have proposed a special rate of 35%, which will be over and above the existing slab of 5%, 12%, 18%, and 28%. Now, to be seen, interestingly, over here is whether the council accepts this proposal or not. And secondly, what happens to the cess? Because already 28% plus cess is applicable on tobacco products and aerated beverages. So will this 35% mean that it will be now 35% plus cess? That is something that we'll have to wait and watch for.
All right, Timothy, thank you very much for that. So that's a big story of the day, the proposals with regards to GST revisions. Just want to highlight NTPC Green, which is now limit up. It's up 10%. And that is, you know, it was a late bloomer this morning, but I mean, it's fully bloomed now. And it's the biggest volume-led gainer across the board in the market. And the other two stocks, right? KPIT and Tata Elxsi. These are the IT from the ER&D space, engineering research space. 6% on Tata Elxsi and KPIT Tech, which is up about 6% as well. So these are, again, these were not there in the mix earlier, but they are strong gainers. Two other names which were not in the mix. So, oh boy, this is turning out to be an interesting broader market day. HEG and Graphite. HEG is up 9% and Graphite is up 6%. So again, same space, similar sort of business profile, and both are sharply higher. A recent listing, I mean, actually the top gainers list is entirely, it's like it's rotated. I mean, the big movers of the first 10 minutes are completely gone, and it's a new set now. Niva Bupa is up 9%. It's a recent listing, and that's up at about 81 odd rupees or so. So just a few names here which are sort of gaining big. Mitesh is with us with what he'd want you to do with some specific trading ideas. Mitesh, over to you.
Prashant, the market is looking strong, so I have a buy on City Union Bank. It's already cleared and, got past the previous swing high, so this should see more continuation logically. Buy here with a stop at 180 for target of 189. The other one is Angel One, which I would, recommend buying with a stop just below day's low. So keep a stop at about 29.30 and look for a target of around 31.50 over the next few days.
Okay, all right. Angel and City Union. Thank you very much, Mitesh, for that. We take a quick commercial break here. Markets up 60 points. Bank Nifty doing better. Manisha puts the spotlight on commodities on the other side. Stay tuned.
Welcome back. All right, let's put the spotlight on the commodity space. Manisha is here. Manisha, what's top of mind this morning?
Well, I'm looking at the crude oil prices because this is one of those rare sectors which is ending 2024 into negative. So putting a spotlight onto this one and with a sense that it isn't really going to turn around and you wouldn't see a positive 2024 for the crude oil prices. So WTI and Brent, there you have it, 5 to 7% of a decline in this year until now. And what really went wrong? Well, a lot of things really. And top of the mind really is China, where we kept on seeing weak economic data, weak oil demand and imports throughout the year, except for the month of November, where the imports have jumped up. The other thing has been the global inventories, which have been on the higher side. The strength in US dollar was a norm in this year, and that has weighed on many of these commodities. And even with whatever output that we are seeing, the world still has 8 million barrels of spare capacity on a daily basis, and that has been keeping the prices under check. If you look at the overall markets, well, for 2025 as well, some of these things could perhaps be overspilling. And add to that the fact that you would be looking at increased oil supply from OPEC, from non-OPEC, from US as well. The production just has been increasing there. And then the China demand growth and stimulus is going to be yet another factor that 2025 will watch out for. The other thing to look at really is about the pace of energy transition and EV adoption, on what numbers we could see going ahead. The Iran nuclear production is yet another thing that the US is watching out for. And then as the US President-elect Trump takes seat into January 2025, there are three things that he could perhaps approve. One, of course, is the trade tariff. Second is the export permits for the new LNG projects there, which he already has spoken about. The other thing is about increase in oil drilling offshore as well as on the federal lands. And most importantly, it also is going to be about the new funding to replenish the strategic petroleum reserve. Going forward into 2025, and most of the reports from global banks and brokerages already are in. And it's quite a broad range, really, that you're talking about in 2025. Citiworld One is the most bearish on crude, $60 a barrel of an expectation. Bank of America talks about 65, and then you have the 70s club as well. JP Morgan believes that 73 of an average is what you could see in the next year when it comes to Brent crude oil prices. EIA, Goldman Sachs are talking about 74 to 76, and then you have UBS as well talking about $80 as a possibility as well. So when you look at all of those reports and numbers there, it does seem like 60 to 80 is a big range that the crude oil prices could see yet again in 2025.
Manisha, thank you very much for that. So that's commodities in focus. 70 points on the Nifty, 24,344. Time for a break. Our special segment, it's economy, market masters. Lata will be speaking in conversation with Vetri Subramaniam of UTI AMC. They discuss where's the market headed now, expectations from the RBI from a stock market perspective, and of course a peek into 2025 according to Vetri. Stay with us.